You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose, and for about 30 years, I've been a trader at some of the world's biggest exchanges, and now every single morning, 11 a.m. Eastern Time, I get on here for Masters in Live, go over the market, share some thoughts, and just look for ways to help you in this extremely volatile market. For traders, volatility equals opportunity. For long-term investors, a lot of people get scared when volatility picks up, and that's why leaning on a trader can really help during these volatile environments. I got the chat up. I got everybody. We always get in here about 10 minutes early, say good morning. Hey, Riz, what's up? Navi, Russ, Aaron, John, Marty, all of you guys, thanks so much for getting in early and joining me on the call. We're going to talk about volatility. We have a cause to celebrate. Why? Earnings season is starting. Earnings season comes around 4 times every single year. Traders need a go-to strategy to trade earnings. You have to trade earnings differently than how you trade every other time of the year. So I'm going to walk you through how we approach earnings. With that being said, let's head over to the slide deck and let's see what we got. And again, we got the chat up. So here's an image I sent out to everybody over email. And we talk about risk, right, all the time. Short-term fear is still elevated. And short-term fear, we can look at the 9-day VIX. And I'm going to pull up an actual chart because we look at the VIX as the VIX is a fear index, right? When the VIX is elevated, like it has been, the market's going to go down because risk is to the downside. When the VIX, this measure of volatility, gets way lower, the market could start trading higher again. Well, not only can you watch the VIX, traders can watch the VIX 9-day. And all that is literally the first 9 days of the VIX. Let me clear these drawing sets here. And so you can see that is finally working its way down. We do need the VIX 9D to continue going lower for this market to trade higher. I'm going to go to the QQQs, which is the NASDAQ. NASDAQ, here's what it's looked like. Goes lower, a 200 period moving average. It trades up to. Markets don't like to stay around big numbers. It failed right there. What we're watching right now is we're watching these VIX 9Ds, and we're also watching previous day's highs and previous day's lows. If I move over to the weekly right here, last week's high, 467. 467 is last week's high. If I move over to this thing right here, which was March 10th, this bar right here, the low was 466. Friends, that is your line in the sand for today. Last week's high is 467. Ooh, excuse me. Yeah, last week's high is 467. This week's low from March 10th is 467 as well. 467 is your line in the sand. Underneath 467, bearish. Qs get over 467, we can look to be bullish. We are still in a very weak trading environment. Good question. Any thoughts on interest rates? And if they say anything about the market like the VIX 9D does. Interest rates right now are volatile. I like being on the long side of price and on the short side of yield. TLT is a 20-year example. I like being long TLT. especially against the volatility in the market? Really great question. This was just the VIX 90. I am so excited to share this. So I was talking about earnings, and every single earnings season, you need to trade a specific way because there's one day where any name is going to move a ton. Goldman Sachs just came out with earnings. They killed it on their trading revenue, really strong earnings. Here's what John says about our earnings program. A cause to celebrate. Since the end of June last year, I've made 23 earnings trades. 17 have closed with 10 winners. I made the minimum investment each trade using one contract. My average investment was $380 for an average of 24 days with an average return of $103. Annualized 412%. So I wanted to share this with you. JR, you are a genius. I am absolutely no genius, but I was on the floor of the Chicago Board Options Exchange. And before I was down there, I was probably just like you, and I had no way to trade earnings. I was gambling. I would make a bet, and if it worked out, I would be a winner, and if it didn't, I'd be a loser. I am no genius, but in 2011, I learned how to trade earnings. I learned a very, very specific way, and every single earnings quarter, we replicate the exact same thing. I've been teaching it at Masters in Trading since I started Masters in Trading in 2015, and then John's been with us since June of last year. In the last 12 months, our earnings trades, we've had 65% winners and an average return of about 40%. So really, really great stuff. John put this at the end of our earnings season, and just yesterday, we shared our first 3 trades for the second quarter of earnings season 2025. So if anybody would like to learn more about earnings season and how we trade, Chris is going to drop a number in the chat and you guys can give a call, but it is a phenomenal, phenomenal way to trade earnings. I want to pull up a chart. Also, what's making earnings a really good approach right now is there's volatility in the market. And when there's volatility in the market, we want to find names that are underpriced relative to their historical movement, and those names present more and more. And Chris just dropped the number in the chat. Does anybody have any questions up until now? You guys in the chat, can I just get a show of hands? Have you guys traded earnings with us? A lot of people think it's just like the same exact trade, but it really is a different approach to trading how you normally trade. It's very, very cool. We use straddles and strangles too. Chapman, since you're buying options, is this earning strategy better in high or low VIX? That's a really good question. So how we trade earnings is we look at, say Apple has released earnings 50 times. We know how much Apple has moved in the past with earnings. So if volatility is higher, the market should price in more movement, but the market is not always correct. The great thing you can do about learning to value options is you start to learn that the options market is not always correct. And what we're doing is looking for that low-hanging fruit. We're looking for the market. Hey, that's not right. The market's not pricing in enough risk. And one more comment about what John says here. What John says here, it's very difficult to do. Because what John says here is he's only done one contract. John's had patience. John's doing one contract at a time. He's taking 23 trades. He's waiting for the results. What ends up happening is people get in, they see a high probability of success, and they start getting into every trade. They think it's easy, and they take every single earnings trade that's out there. That's not the approach. Trading involves discipline. We like to think of ourselves as snipers, just waiting around for those optimal trades. So even yesterday, I went through all the names that are going to announce earnings in the next 8 weeks. And out of all of them, I found 3. That's it. I found 3 trades that we really like. Aaron's question, why do we buy quite a bit in advance? Why not the day before? Great question. When you buy the day before options, it's a binary outcome. It's either going to win or it's going to lose. What we want to do is we want to find earnings that are mispriced 8 weeks in advance, 6 weeks in advance, 4 weeks in advance. Because oftentimes what happens is they price things correctly into earnings. So the optimal situation is we could put a trade on 8 weeks before earnings, and then we take it off 3 days before earnings because the market realizes, oh shit, we priced this one wrong. We need more premium. And those are the best trades that we can find. Aaron, those trades when there's just 5 days to go until expiration and earnings are coming out in 2 days, that's a more difficult trade because it's high risk, high reward. Like it's a binary outcome. There's no way to break even on that trade. How we buy these when we're wrong, ideally, if we can break even, that is a really, really fantastic trade. Hopefully that makes sense. Again, Chris put the number in the chat. It's 1-800-304-5601. Give a call. Our guys are standing by and they'll answer any questions you have about this earnings program. It is just absolutely phenomenal. With all that being said, yesterday I shared another trade with our advanced notice community, and that trade was because a metal, a very obscure metal, had a really, really strong day yesterday. Palladium. Bet you didn't realize palladium was up 5.5%? Well, palladium's up 5.5%. What stocks are also going to benefit following palladium's strong move yesterday? That's what I'm going to go over with our advanced notice community. Thanks so much for watching. I'll be live tomorrow, 11 a.m. Eastern Time. I hope to see you there. Hey, all access. Very exciting day.